Good morning, everybody. It is 26th February, 7:30 in the morning. I'm going to quickly go over today's watch list, kind of how I make my watch list as well, and just want to talk about the current state of the market that we're in right now. So I'm sure, as everyone noticed yesterday, everything was pretty red throughout the whole markets. And what that means is, this could be a turn. We could be entering a bit of a bear market at this time, or this could just be a slow period. The next few days, next few weeks will be really telling. I will say there were so many hard cracks and so many failed bounces with the NASDAQ dropping, SPY dropping. Pretty much everything was red yesterday. So it's really important to stay safe and not force anything. I mean, especially if you're a day trader, your job is to, play whatever the market gives you. Which right now that means there's probably gonna be a lot of short plays in the next couple of days or weeks. But with that, there could also be some bounce plays if we can get a little bit of strength back in the market. If you are a long trader, this could be a very slow time for you. It does not mean you can't make money though. You can make money as a long trader in a bear market. You just have to remember to keep your position sizing in check. Can't be playing with huge size like you were in a bull market where things are running 300, 400%. And you have to take losses extremely quickly as well. You need to cut those losses fast because especially in a bear market, if a trade goes against you, it can really go against you. And then number three, you just need to stick to your patterns. Really hone in on just one or two patterns. I would recommend the panic dip buys and breakouts. Especially if you can find some major daily breakouts, those are going to be your best bet. Especially when you're in a bear market, those plays don't come around very often. So when they do come, you're going to get a lot of investors and traders trying to capitalize on that, which can still give them some very big runs, which is nice. But you have to make sure you're there watching for it because they don't come around as often when we're in a bear market. And that's not to say we're in a bear market yet. I mean, this is still early days. There has definitely been a momentum shift in the market, that is for sure. But I don't want to go ahead and just say that we're in a bear market right now. I will just definitely say we're in a slow period. One reason you can tell is if you look at my top percent gainer scan, every day before today and even yesterday, this would have multiple stocks up 200, 300, 400%, just insane numbers. And that was kind of a cause of the mania market that we were in. So just something to be very, very aware of. You're going to see in the charts today that there's a lot of stuff that are just beaten down. Some amazing short opportunities yesterday, as it is with bear markets. I know a lot of traders banked shorting GME, AMC, all the meme stocks. Really, any shorts yesterday were doing really, really well. So congrats to you if you're a short seller. It's been a big bull market, so it's been rough for shorts out there for the last 6 or 7 months. So it's time to give them some plays again. But yeah. So TSNPD, this was formerly TSNP. I believe they're doing a stock split. Pull up the old chart. Yeah, so as you can see, TSNP is no longer a company anymore. They are now TSNPD. There, I'll pull up the news for you. Yep. So basically, this has been in the news for a while that they're changing their name to Humble, HUMBL. So they've now since then changed their ticker to TSNPD. As you can see yesterday, I'm primarily a long trader. I do like short selling. I used to be a short seller for a while, but that was back during 2017, 2018. And with this market that we've had recently, being a long bias trader has been so good. And one of my favorite patterns, as you guys know, was the panic dip buy. And right here, you can tell that the pattern is still alive. It happened late in the day, but it is still a thing. And that is why I would highly recommend this pattern for the bear markets as well. Just because even though it won't come around as often as it was during the bull market previously, when it does happen, you can tell that it still brings in a ton of volume, which means it's a really, really good setup for you to make some decent percent gains on. The only issue is in a bear market that they tend not to bounce as much. This was a nice 20% bounce, which is great. but moving forward, you have to have realistic expectations that you might only get a 10 to 15% bounce most of the time. If you look at the yearly chart, it's come down quite a bit from its highs. A really nice short opportunity here, which is this is just your typical stock trading framework. You know, you get consolidation, you get the breakout, you get topping action, and then it finally comes down. It'll have a bounce, and then honestly, with penny stocks, it generally comes right back down. So this is what I've been saying for months now about how these things will come down. People didn't believe me. They thought things would keep running up, and that's just not the case. LTNC, nothing really yesterday. I mean, it had this panic you could have bought right here, and it had a nice little run up. This was tough to play. I did try to buy this panic right here yesterday, but I couldn't get filled. Fills were really tough for me yesterday. So I didn't make very much on this. I don't think I made anything on it. I think I made it. If I did, I think I made. No, I did. I think I bought down here. I made like $20. Was not, the fills were not good. The spread was kind of wide, so I just cut the trade. TSMP I did play yesterday. I made $100 on this ticker. Not to mention, I bought this right out the gate when I saw that the bidding pressure was really heavy. I bought here and I sold at the top, which was nice because I didn't think I would get very many morning spikes yesterday, so I was pretty happy with that. AABB, I missed this one as well. I was watching it live. It was on my watch list, but I just couldn't nail that bottom. The fills weren't good here either, which is really frustrating, especially because when this came down to 2.4, was it like right here 404? I actually put my buy order at like 2.43 or 2.424, I think it was a 2.43. Yeah, right up here. I put about, I don't know, like a whole 3 or 4 cents above the best ask, and it just couldn't get filled. So it happens. Can't cry about it. Is what it is. Again, with the market we're in, I would be anticipating some more panic. It'll need to be very severe for me to want to buy it, at least 30-40%, or starting off at 20. I'd want to see at least 20, ideally 30 to 40% for me to buy into. OZSC crushed all day yesterday. No real place to buy. One thing to look at on the daily chart here is it is now right near the previous breakout level. So generally with stocks, if they stay strong, when they come up and they break out, they'll generally come back down, and they tend to find support at the previous resistance or breakout level. So it obviously went past that a little bit. So it'll be interesting to see if maybe it'll find a base down here at the 20 to 20 cent level. If it can't, then I would highly anticipate it has a nice fade down to 7 cents or lower. It's really hard to short OTCs. I can't do it at E-Trade. I think Speed Trader you can. I believe IB lets you short these. So I won't be able to short it. That would be a strategy I would look into if it could. If it had a spike and it failed, I would look to short into any failed spikes. But again, I can't short with E-Trade on OTCs, especially these low price ones. And I know for IB and Speed Trader, those fees can be pretty expensive. So you just gotta be careful. SAMP, this was a nice one yesterday. It had a nice little morning spike. I missed this one as well. As you can tell, I had an all-day fade, no real panics. And this is something you have to watch out for as well. I was talking about this in my mentorship program, where you'll get these stocks that fade off, and then they have these weak little bounces, and then they just fade off again. You really want to be careful buying like slow, gradual declines like this. You know, you want big, hard panic. You want those big red candles. You want to just come slam down, because when these things slowly fade, the bounces tend to not be as good. This was actually a decent bounce, all things considered, but as you can tell, it was very, very short-lived. So if you do get these slow panics, you really have to be in and out, and not get overconfident with the position sizing. This was actually a nice spike during the afternoon. It kind of came up and broke the high day consolidation, but unfortunately it couldn't get much further past that, which not surprising with the markets. I have it on watch because it was, a big runner, but it is coming down now. I expect it could probably come down another, 5 cents, 50 cents. So we'll keep it on watch. If this has a really big panic, I would like to buy into that, especially because it's a sub penny. These things have massive percent moves. So we'll see if we can have a big panic today. It would be really nice to buy into if it could. OPTI, again, just another stock that got crushed. And same plan, looking for some major panics. Oops, look at all these indicators I have on this thing. Let's move that out. This is from way back here. Yeah, and it's getting ready to test this low support level here at 0.17, which would then test 0.15. So we'll see what it does today. Again, I'm mainly going to be watching these to see what they do. If they start basing and then kind of can hold here and then maybe have another leg higher, kind of what happened back here. It came up, came down, not as much obviously, and then based and then went higher. That's what I would like to see here. That would show that there is some strength to this stock. But I mean, if the markets are bad, if traders don't want to come in and trade, this could easily come test the 15-cent level again and potentially even go lower. And then two new stocks I'm putting on here that I don't know to talk about on my watch list is Halliburton and Tesla. The reason I'm talking about these is I'm looking at potential options plays on these. If you look at the yearly chart on Halliburton, you'll see that it is trying to perk up here past this resistance level 22.26, and it would be approaching this multi-year high resistance at 25. If it can break 25, it could push towards its 3-year highs of $30, which if it can break past here at 25, this would be an interesting buy for me because I feel like you get some volume we could push and at least test 30, which would be a $5 gain, which on the options market could be a decent 200% winner. And then if it can push past 30, I mean, it could really start running. Yeah, so if we go past 30, then our next major resistance would be over here at 50. So that'd be a $20 move if it can get volume, if it can come and push. So we'll see. I'm keeping an eye on that just because it is making that nice V-shaped recovery. Tesla, I wanted to play puts on this yesterday, but I didn't. I was just waiting for some more confirmation, and then by the time I saw it, it was a little too late to play. So keeping eyes on it. There's no real pattern emerging for me right now. If it came down and it was going to test the 621 level, I would definitely look at buying some puts there, or even the 621, because then I think you could have a really hard pull down to the low 500s, even the 400s, which would be a really nice options play for the puts. But if it can base here, I would look at some call options as well, some longer term call options. With the fact that Tesla is a part of the S&P now, it won't be as volatile as it was in the past generally. But with the markets going down, the nice thing is you can kind of time it a little bit better, because if the S&P, NASDAQ, and the Dow Jones are going down, Tesla will more likely follow it now because it is a part of those indexes. And yeah, that's it, guys. I hope you enjoyed. One thing to consider too, in regards to all these plays, is the trader mindset currently in the market. You got to remember, we just had a huge bull run for pretty much last year, starting in, I want to say, May of 2020. So a lot of traders are burnt out. They've been trading nonstop every day to the grindstone, making really big returns, and a lot of them want a forced vacation. So with the slower markets, that could also mean these traders that haven't also provided a lot of liquidity might step away and actually enjoy some personal time, which will mean less volatility, which will mean less percent gains, which means a slower market. So just something to consider. Again, if you want to learn more about this, if you want to learn how to trade in any market and profit and consistently pull out money, which is what we've been doing the whole month, and the last 2 months with our membership program, we've been consistently pulling out money from the market. And that's the key, because that adds up over time. If you're consistently bringing out money and you keep your losses small, that is how you grow an account. And I would love to teach you guys. So please, if you are interested, join the program. I've been getting some good reviews for it, and we are consistently adding more and more to the program every single day, and it's just going to keep growing. So I'm really proud of it, and I can't wait to see where it goes. Thank you guys for your time and for watching. And if you have any questions at all, please do not hesitate to ask. I'll answer you as best I can. All right, guys. Peace.